A global recession may not occur this year as previously forecast, according to the latest World Economic Outlook from the International Monetary Fund, the IMF. In its World Economic Outlook update press briefing on Monday, the IMF said it expected the global economy to slow this year as central banks continued to raise interest rates to tame inflation, but also suggested that output would be more resilient than previously anticipated and that a global recession would probably be avoided. The IMF, in revising its projections in October, pointed to resilient consumers and the reopening of China's economy as among the reasons for a more optimistic outlook. Pierre-Olivier Gourinchas, chief economist and director, research department at the IMF, provided a synopsis of the IMF's outlook update at the press briefing Monday.
Growth will remain weak by historical standards as the fight against inflation and Russia's war in Ukraine weigh on activity. Despite these headwinds, the outlook is less gloomy than in our October forecast and could represent a turning point, with growth bottoming out and inflation declining. Economic growth proved surprisingly resilient in the third quarter of last year, with strong labor market, robust private demand, and better than expected adaptation to the energy crisis in Europe. Inflation, too, showed improvement, with overall measures now decreasing in most places, even if core inflation, which excludes more volatile energy and food prices, has yet to peak in many countries. China's sudden reopening paves the way for a rapid rebound in activity. And global financial conditions have improved as inflation pressures started to abate. This and the weakening of the US dollar from its November high provided some relief to emerging and developing economies.
Global inflation, Mr. Gourinchas said, is expected to decline in 2023, though it is expected to be above pre-pandemic levels in the ensuing years. The IMF economist provided some recommendations to monetary policies in global economies to lessen the risks from the slowdown in economic growth.
Where inflation pressures remain elevated, central banks need to raise real policy rates above a neutral stance and keep them there until underlying inflation is on a decisive declining path. Easing too early risks undoing most of the gains achieved so far.
In the United States, growth is expected to slow from 2% in 2022 to 1.4% in 2023. In October, the IMF predicted even slower economic growth globally and forecast a possible recession. This update, however, sees a more improved economy and lessening possibility of a global recession. Andre Huey, SKN Newsline.